Good morning. Hope you had a nice weekend. Got US GDP first look at this week and non-farm payroll, so it should be pretty interesting week for us. Let's get stuck in. So, as we start the session, sentiment is quite mixed out there. Looking at stock markets across the world, they are finding gentle bids. You can see volatility is pushing lower. US equity futures are finding dip buying. Euro stocks, DAX, both up higher. China 50 finding dip buying, same with the FTSE 100. But notice very mild moves. And we've got this condensing price action that you're starting to see. Okay. So prices are just coiling up. And that's not a surprise today, because if you look at the calendar, it's extremely quiet. There are some very interesting data points out this week. We've got US GDP print, the first reading coming up on, is it Wednesday or Thursday of this week? And then we've got, GDP on Wednesday. And then on the first of the month, the Friday, we've got the US labor market report, which is going to be important. However, today we're starting off on a very quiet footing, and there's an absence of drivers in terms of scheduled economic data. So that's partly reflecting a quieter session. Looking at the bond market, we are seeing some selling off in the bond market. In particular, we want to keep our eyes on US Treasuries. This surge higher in US 10-year yields was what got President Trump concerned. So President Trump is very worried when he sees these US 10-year yields rising higher. It's a sign of distress, particularly with all the risk-off trading. Very unusual to see US 10-year yields moving higher as risk-off trading is going on. So what this was showing was distress and sell America. Trump absolutely hated that. It can create significant turmoil in the markets. If you remember back in, what was it, a couple of years ago when Liz Truss, the UK Prime Minister, who was Prime Minister for just a few days, she came up with some really bizarre fiscal ideas.
It says the first trade deal might come as early as this week or next week.
And there was a big surge in the bond market, which, to be honest, is still being felt today. So it's a bit like putting the genie out of the bottle. Once you start getting stress in the bond market, it doesn't just quickly go away. This is a little chink in the US armor. It's not changing anything big, but what it means is for us, we're going to keep our eye on 10-year yields, particularly if we start seeing them move up higher. It could be a sign of distress. So we'll keep that on our radar. And just noting, nothing toward, but 10-year yields are pushing up in the US. Looking at the commodity market, gold is pulling off of its record highs, but silver is the particular instrument I want us to look at. Now, what I like about silver is we've obviously got the gold-silver ratio, which you can see is around 100. In my book, whenever the gold-silver ratio is above 100, it's a clear buying opportunity. So the first sort of
just want to be aware of commentary from Germany's Merz says it is unclear whether NATO will continue to exist in the coming decades.
So what I'm looking for here, right? And you can see this gold-silver ratio. You can see when it's very high, if you look back here in 2020, right? And just see that was one of the last times that the gold-silver ratio was over 100, because it was up to 120. There's a chap I know as part of a very big fund. He was just piling into silver. The further this went down, was piling into it. And look at this move in silver. You got to move from $11, up to $30. Huge moves. So I'm expecting a sharp move higher in silver on the base of this gold-silver ratio.
Just hear more commentary from Besant. Says there is a tax meeting today.
So what that means is if there's any price action signals to go long in silver, that could be an excellent. So this is the first opportunity I want to highlight, and it's silver. If you look here, we've had this break of this potential trend line. Now it's a potential trend line only because you've got two touches. However, you can clearly see you're getting it. It's been respected there. So this is clearly, in my book, now this is a strong trend line. We've broken out, pullback. What I'll be looking for here is a kind of example where you want a pin bar reversal, but what you want to see this close within the body of the previous candle. So I want to see this push up and close at 33.10 or higher. So if I get a close of 33.10 or higher, right? Up to 33.20 would be great. Then I'd be looking for a run back up to the 33.50 highs. That's definitely something to be looking at. Okay. You're looking for a good, strong pin bar reversal. And if you look at sort of a couple of pin bar reversals that have worked here, you can see here, downtrend, look, price breaks into this area, closes within the previous day, long tail, and then you've got that run up to that next resistance level. Similar here, long tail, close within the previous day, pushing up. So what I'm looking for here is I want to see the same thing. I want to see long tail. This is the important thing. The close, I want to see within the body of that previous candle. That increases its power essentially. And then you can look for a run back up to the 33.50. Stops can just run underneath this potential trend line here. So definitely something that I'm paying attention to today and looking for a run higher. I am sort of core long from silver all the way down here, sort of 30.50 added as we broke out of this trend line here. And I would probably look to add again another small, my base of my position is down here and I'm adding small amounts as we move forward. Okay. So that's what's going on there with silver. So first opportunity that's alternative today will be silver. Should we get that environment? Just having a look on the 4 hour, see if there's anything that's sticking out. You've got Harami inside bar, quite tricky to trade inside bars intraday. However, that, close above that, that wouldn't be unreasonable. Retest of 33 and see if 32.63 holds, but it would be better to wait for the daily chart, okay, and see if you get that pushing up. Again, in the futures market, looking for any trap sellers down there will be a great opportunity going long in silver. So that's the first instrument for us to look at. Gold continues to find bids. It remains a buy on dips. Looking at the majors, it's very quiet. What we're noticing is strength in the pound. That's the strongest currency on the session. And the dollar is relatively weak. But there's no real reason for the bid into the pound. We've got Bank of England meeting next week. And one thing I just point out about that, notice this though, the pound dollar tends to see this weakness. Okay. Bank of England's meeting next week. Okay. So just notice that. So at the moment, yes, we've got some strength, but how well can that last? It's being attributed to UK Chancellor Reeves meeting with US Treasury Secretary Bessent and seeing that sort of optimism around the UK getting some kind of trade deal. Huge option expiry about 1.12500. But aside from that, just notice this coiling action here. You see when you get this coiling kind of price action. So what we're looking for in the euro dollar is say we get some really negative news about the US trade tariffs, then you expect more dollar strength and then you'd expect euro dollar to break out, right? So you look for a first move up to 11400, the R1, then a secondary move up to R2. If that breaks, then it's up to R3. So be keeping an eye on that. Just see when you see this condensing type price action, see here, condensing, breakout, condensing, condensing, breakout, right? So you just notice that in the euro dollar, condensing breakout. So looking at the futures market, for instance, if you see a strong breakout intraday on volume, with volume really confirming it, then you could expect a run higher in the euro dollar, and you could use volume in the futures market to confirm it. Okay, volume confirms price. So they're the two opportunities that I can potentially see at the moment. There's nothing else worth looking at with sentiment. So, in terms of intraday, we'll check out Swiss franc, yen. Look, yeah. Okay, right. So let's carry on. Let's just go back. The general sentiment is mixed. You got a potential 3 day ceasefire being touted from Russia from May the 8th to May the 11th. Okay. We've got the USTR office has prepared a framework for staggered reciprocal trade negotiations across 18 partners. So they've got a 2 months timeline till July the 8th. So that's positive on sentiment. You've got Besant speaking, the first trade deal could be as early as this week or next week. So there's positive sentiment there, but there's lots of potential negatives with Besant saying, it's in China's core, they can't escalate things. The tensions are still very much there between US and China, and it's going to be very headline driven. China said this, US said that. We're in an antagonistic relationship. So be very careful on the headlines. The FX space is muted with the pound finding strength at the moment, and then just generally weak sentiment. You can see the sentiment is mixed as well. You look at the New Zealand dollar, Aussie dollar, towards the lower end of the pack have been certainly earlier in the session. A little bit of a recovery now, but it's just very mixed. And dollar weakness in the current environment, that's more negative to do with risk. And that's a part of that sell America theme. And the more sort of dollar weakness we see, that's a bad sign right now. Dollar strength is seen as a more
It's a
positive
bit more
sign.
here.
The Swiss franc, yeah, the SMB um, could possibly use negative interest rates. Now, if you look at the Swiss franc, right, the Swiss franc have a pressure on them. And the pressure is when the Swiss franc becomes very strong, the Swiss hate it because it makes their exports more expensive across the world. So, ever wondered why Swiss watches are so expensive? Swiss chocolate, Swiss gold, it's partly to do with the strength in the Swiss franc. The reason the Swiss franc gets strong is it's seen as a safe haven currency. You think of all the people that have wanted to hide their money behind the Swiss Alps. Geopolitically, Switzerland is beautifully made. It can just stay neutral much more easily than, say, if you look at the low-lying European countries, you think of those huge plains that Napoleon was able to sweep across as he went into Russia. You think of the German army taking advantage of those easy European lowlands. It's very easy to have huge battles and big sways. Switzerland isn't like that. It's hidden behind all these mountains. You want to try and attack Switzerland, it's incredibly difficult. So as a result, the Swiss franc has developed a knack for banking and has been quite happy to tuck away European gold over the years and has a reputation for a safe haven status. That Swiss franc strength, right, has pockets. And in the latest risk-off trading, we've seen the Swiss franc run higher. So one way the Swiss National Bank can fight this strong Swiss franc is to make interest rates negative. Now, Swiss inflation at the moment is fantastic. Look at their Swiss inflation rate. It's 0.3%. So have they hit the 2% target easily, right? And in fact, they're in danger of going negative inflation. So that just strengthens the Swiss franc. So what the Swiss can do is turn interest rates negative. So what Najam's trying to do, which is exactly correct, is he's trying to pair strength with weakness. So the Bank of Japan is expected to hike interest rates in line with the higher inflation. They've been very slow at hiking interest rates. I'll see if this interest rate track is working. I don't know. It's not working at the moment, but the Bank of Japan had kept interest rates sort of negative while the rest of the world was still having quite high interest rates. So now we're seeing the Swiss might go negative, which the Bank of Japan wants to go. So in other words, they're going different directions. So
From Ukraine, a foreign minister says if Russia truly wants peace, it must cease fire immediately.
right. So that kind of broad basis makes sense. Now, what becomes difficult with Swiss franc, Japanese yen is just the timing. That timing
From
right.
Ukraine, the foreign minister says that Ukraine is ready to support a lasting, durable, and full ceasefire.
So you're seeing the Swiss franc is gaining in anticipation, right? Breaking out that trend line, pull back, bullish engulfing bar, pull back to that trend line, quite an easy area to define and limit risk. And to summarize, I think there is a broad Swiss franc yen upside. The only slight danger is if risk off sentiment fades, then you could see the Swiss franc pull back against the yen. Technically,
Indicating how a meeting.
risk can be limited nicely with this trend line here and stops maybe under the 100, 200 exponential moving average. The only problem with the Swiss is I'm looking at the headline, and 25th of April, Schlegel said the main instrument is interest rates, but Forex interventions can also be used to influence monetary conditions. In other words, what Schlegel's saying is that interest rate moves is what we want to use to influence the Swiss franc, but we can use interventions. So you could see the Swiss franc depreciate against the yen. So it's tricky. And also the timing of the SMB is notoriously difficult to look at. So, okay, we've seen the Swiss franc spike on this risk off trading. Maybe you could see this push back lower down through here. Yeah, it's not unreasonable, and risk can be defined the other side of this trend line with Swiss franc weakening as the yen strengthens. And you look at the yield spread, it is pointing lower. So Swiss franc yen downside, I don't think that's unreasonable. But as long as risk is managed, then that's fine.